It's Thursday, May 18th. You're watching today's Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us here at Exxon.com. The dollar traded mixed against the other major currencies yesterday, losing mostly against the risk-linked currencies. Today, the greenback is outperforming almost all its major counterparts. What may have kept traders willing to add to their dollar-long positions may have been headlines that debt ceiling negotiations in the U.S. are moving in the right direction, with both President Joe Biden and Republican House Speaker Kevin McCarthy agreeing that they must prevent a catastrophic default. Combined with data suggesting that the housing market is timidly improving, or at least stabilizing, and following Tuesday's better-than-expected retail sales, this allowed market participants to consider a higher probability for another hike by the Fed in June and take off the table more basis points worth of rate reductions. According to Fed Fund futures, they are now assigning a 20% probability for a June hike, while they are fully pricing in 2 quarter-point cuts by the end of the year. All this is likely to keep the U.S. dollar supported for a while longer. However, calling for a full-scale bullish reversal remains premature. History has shown that debt ceiling accords are reached at the last minute, which leaves room for more disappointing headlines heading into the June 1st deadline. Wall Street also cheered the progress in debt ceiling negotiations and the decent housing data, with all 3 of its main indices gaining more than 1% each. It seems that investors are willing to buy when headlines and data are easing concerns about a potential recession in the U.S., but they are also buying when expectations or rate reductions heighten. Perhaps in the latter case, they are willing to buy high-growth tech firms despite fears of an imminent recession increasing, as those firms are usually valued by discounting expected cash flows for the quarters and years ahead. Thus, expectations of lower interest rates in the future result in higher present values, but also hopes of lower borrowing costs. Investors' relief was also reflected in oil prices, with WTI gaining nearly 3% yesterday, but also in gold, which extended its retreat and is now flirting with the key support zone of $1,975. This was a Daily Market Comment here at Exxon.com.